Hey everybody, it's Jeff with another silver and gold market update. I wanted to create these on a weekly basis just to create a track record to allow any silver and gold stackers to keep up with premiums, paper markets, hedge funds, and really try and get a better understanding of how and what moves these markets on a regular basis. Most importantly, so you could spot opportunities that are times to buy and maybe times to sell as well. What's affecting the markets this week is definitely the treasury yields. That's been the storyline as the 10-year treasury has exceeded 1.5%. And it's not so much the absolute level, but the speed at which it got there from a low of about 0.5% just about 6 or 8 months ago. That has spooked the markets and created incredible amounts of volatility in the equity market, not all down, but just the unknowns is enough to kind of get the funds to quote unquote sell what you can. And the funds have actually been long gold and silver for quite a while now. Ever since the start of 2020, they've been accumulating long positions. And since the peak in August of gold, they've been slowly liquidating. And just recently, in the last 2 days, they liquidated even more and really has created somewhat of an ugly gold chart. So let's jump right into the silver. I like to create this long track record here because it helps really understand the change in premiums. Now I'm using appmax.com and the random year 1 ounce BU American Silver Eagle as the kind of threshold week after week. Now I know actually JM Bullion is charging quite a bit less. AppMax, this is definitely not the cheapest place to buy silver, but it is a good barometer since so many people look at it. And silver spot is down week over week. So you can see to 26.84, but largely it's been range bound for the last about month. And but the APMEX Silver Eagle is still a $12 premium, no change there from really when it jumped in late January, early February, and that infamous Sunday, it jumped to $12 premium and has maintained that surprisingly, even though the funds, as you could see, have liquidated from when they started on January 29th, they were long 43,000 contracts of silver, and now they're down to just 34,000 contracts of lane. So you could see they are definitely in a general selling mode, which is putting pressure on any rallies in the spot futures market. Next up is a silver chart. The hedge funds watch this chart very closely, and I drew what's called a trend line, which kind of just goes from low to low and extends out. And whether it's right or wrong or voodoo magic or real, the funds will absolutely rely on these trend lines, and they will buy as long as it's above and bouncing, or they will sell if it breaks through. As you can see, I mean, it bounced right on it today. For now, it's looking okay. It's still generally bullish. The trend is higher. Most people would view that as a net buying opportunity, but when you see gold, it's at least cause for a pause. It's a dollar index, and generally the trend's still lower. The highs are lower, but the lows have not necessarily broken down too much. I think this is more of a consolidation at the moment, but this is kind of what the mild dollar bulls are looking at, an appearance of a support found around this 90 mark and bouncing. And this is extremely important for silver and gold. As this goes higher, gold and silver goes down, which who knows if you're generally a stacker, maybe you want it to go down. I certainly do. I would love to buy some gold. I can't pay the premiums right now. So I'd love to see a break, but if you're long a bunch of it, then maybe you don't want to see that. But the dollar index for now looks like at least has a short-term trend higher, which might provide further pressure on gold and silver futures. So kind of boiling it down for silver, I mean, the physical market premiums are still solid, which represents a tight supply, real actual supply tightness. However, the funds in the paper market look at it a little bit differently. They see the hedge fund position as neutral to bearish, where they're still long and liquidating, which is probably a net bearish point of view. The dollar index is neutral to even maybe bearish in the very short term, and the charts are again neutral to hopefully bullish if they could find support along that trend line. So I'm kind of torn on silver at the moment. Looking at gold week over week, you can see there was a big drop in the last 2 days on the spot price. It broke about 40 some dollars here, right below some key levels as well. And it brought down the cost of the American Gold Eagle. However, those premiums just keep ratcheting higher, whereas silver premiums kind of peaked and flatlined at $12 over. You can see gold's now up to 190 an ounce over, which is just crazy. I mean, the funds are liquidating, though. You can see the funds have sold almost 36,000 or 33,000 contracts, which is the main culprit of why the spot price has dropped over $100 an ounce. But those premiums, good for them. They are keeping up, which is a representation of, in my opinion, the actual tightness in the physical market. And this is really what the funds are looking at. And this is why I think so many people get frustrated that the futures are so disconnected from reality in terms of the spot markets. They broke again, and it was on the dollar rally. It's on these treasury yields, on the equity markets, on nothing to do with the actual physical supply and demand, but they broke that key level on the chart. And for now, in the short term, the funds are going to keep selling it. As long as you can find someone willing to sell you gold at less than those extreme premiums, it might be a decent buying opportunity. Maybe let this play out a few days here and see where it goes. But that 1650 to 1700 mark would be one heck of an entry point, especially when the physical market's telling you that it's supportive, which kind of boils it down to, as I said, physical market's bullish. Hedge fund positions short term are probably still bearish, as they seem to be full on in a liquidation mode. The dollar index is neutral and the charts are definitely bearish short term. So as a stacker, I would definitely say use these breaks as an opportunity. You just got to shop around for the best premium. But I definitely see gold as eventually a buying opportunity. So that's all I have. I appreciate you watching. I put these out every week, so make sure you subscribe. Take care.